looking for positivity or looking for encouragement. Temia Brinson aims to educate you, to give you the push to believe, to have the mindset for success. Mindset for success. To have the mindset for success. To have the mindset for success.
Tonight we have a very informative show for you. We have our special guest, John Burnett. He is the founder and managing director at One Empire Group. He's also an author and business commentator with appearances on CNN, Bloomberg, and Fox Business. Let me talk to you about the stock market. What you've been doing, because you know inflation is here now. Okay, prices are going up. Even with the pipeline. I mean, the pipeline, we didn't need any help, but before gas was going up, but now everything's going up.
Inflation is driven by several factors, right? So you pointed out the pipeline. So the pipeline, one, let me just put it in the context of the working class. So the pipeline effect, shutting down the Keystone XL pipeline that Biden did shortly after coming into office. One, if energy prices go higher, that's going to increase the cost of manufacturing, right? So whether it be crude oil or other crude oil derivatives, even when it comes down to synthetic fibers, like rugs, nylons, rayons, things that go into producing commercial goods, those things are derived from crude oil that's processed down to petrochemicals, non-essential petrochemicals that goes into synthetic fibers, right? Even plastics, right? So when you factor all of that in, if the price of oil goes from, let's just say, by way of example, $45 to $75, and it could go higher, the cost of energy is going to increase the cost of manufacturing. And when you look at the cost of all of those goods, right, that depend on energy as a key input, that is automatically going to push prices higher across the board, as one example. Secondly, probably most common and heartfelt are gasoline prices, which again comes from energy, right? So people can quickly see the impact of energy policy at the gas pump per gallon. What is a slower creep are the prices in different consumer goods, right? That depend on energy for manufacturing. So that's just one example. And then you have certain issues with other products, goods, and services. And then when you factor in wage levels in terms of Fight for 15, all these other dynamics where small businesses and large businesses are paying people to try to get off of government assistance through the current stimulus and ongoing stimulus, then you have wage inflation. Then you have just general inputs in terms of energy and things of that nature those costs rise. And we all know, right, even when it comes down to the talk about raising corporate taxes or business taxes,
Right.
that is also going to factor in the oncoming inflation as well, as far as spiking potentially higher. And we do know that corporations, all they do is pass, even small business, pass the cost of taxes onto consumers by raising prices.
Mm-hmm.
And if your viewers think about which businesses have pricing power, meaning that they can actually raise prices and people will still demand the product.
I mean,
right?
but that's like the restaurants, because meat and food is going up for restaurants, so it's a little harder.
Well,
it was hard for COVID because of COVID.
True, but restaurants is still a discretionary decision.
Yeah.
People can eat at home. So restaurants, even though I don't think they have pricing power, they have pricing hope. Meaning that when they increase their prices, they hope that people will still eat out, right? But in terms, especially when we're talking about families, eating home, the cost of staple goods like milk, juice, cereal, chicken, vegetables, things of that nature, when those prices start well, they already have, but really excelling higher, that's working class family is really going to feel that crunch.
Yeah. Mm.
So it's terrible. And we already see the lumber, right? The cost of lumber and other, construction build out, and raw materials, even for whether you're talking about new homes or existing homes, just like bonds, right? In terms of, existing homes have to adjust, just like the prices are going to or have and will continue to rise for new homes. So if a new home is going to increase by 50,000, existing homeowners are going to say, hey, I invested into my property over the last several years. I'm going to increase my price as well to match the market. So hence you have new construction and existing construction in terms of homes, prices going higher. In addition to interest rates creeping higher as well. So that's going to be a double whammy. Not only will the cost of the home hit consumers, but even financing it will cost more. In an environment where, guess what? There's a cap on the amount of mortgage interest deduction.
Yeah. We'll be right back right after this break.
Right now, the COVID-19 vaccines are available to millions of Americans, and soon they will be available to everyone.
This vaccine means hope. It will protect you and those you love from this dangerous and deadly disease.
I want to go back to work and I want to be able to move around.
To visit with Michelle's mom, to hug her and see her on her birthday.
You know what I'm really looking forward to is going to opening day in Texas Ranger Stadium with a full stadium.
We've lost enough people and we've suffered enough damage.
In order to get rid of this pandemic, it's important for our fellow citizens to get vaccinated.
I'm getting vaccinated because we want this pandemic to end as soon as possible.
So we urge you to get vaccinated when it's available to you.
So roll up your sleeve and do your part.
This is our shot. Now it's up to you.
Learn how to trade stocks with this stock market trading course available at TemiaBrinson.com. Here, you will learn how to manage your risk. You will learn when to cut losses. And you will also learn how to define your targets. You will learn trading strategies. And these are simple strategies. These are proven strategies. And you will learn how to develop a solid trading plan. And this is a professional grade trading course. It was compiled by industry top professional traders with real trading examples. And this is also from experienced traders with over 7-figure trading results. And it's an easy to follow step-by-step approach. So go to TemiaBrinson.com and get this stock market trading course today.
COVID-19 has changed how we express our faith and gather to worship.
We all want to get back to how we pray,
how we congregate, how we lift our voices in praise. Now it's time to take the first step that lets us get back to spreading the word without spreading concern.
Before we can safely come together, we need the facts.
As COVID-19 vaccines become available, you may have questions.
Should I get it?
Is it safe?
Should I wait?
It's okay to have questions. Now get the facts. Learn more at getvaccineanswers.org so you can make an informed decision when vaccines are available to you.
And now, let's continue with our discussion. And then if you sell your home at the higher price, I mean, where are you going to go? Because homes are, if you buy something else, that's going to be high too. So,
well, let's talk about that, right? So just like, because I tell people, if you really want to understand personal finance, right, just look at how businesses make decisions. There's no difference. There's no fundamental difference. Let me give you an example. Tesla, Elon Musk. When California started talking all this craziness about raising taxes and making it more costly to do business in California, Elon Musk said what? Hey, I'll move my manufacturing, right, my house, my home to Texas.
Right.
Right? So the thing is, consumers can have the same options. They can sell out of higher price states, right? And then buy a home in lower price states.
Right.
So for example, if I'm in New York and my home, let's say is $750,000, I can move to Texas where there's or Florida where there's no state income tax, then buy a home of a 3 to 4 bedroom home, 2-car garage, pool in the back, right? For $350, let's just say I really want some square footage. Let's just say $400,000.
Right.
Right. I paid all cash, no mortgage, and I still have $350 in the bank, but I only pay taxes on the $350, not the $750. Right. It's beautiful.
Yeah, the same here in Florida. People come from California and, New York, and because the price is higher, cost of living is higher there, and they move from a lower state like Florida, man, and we don't have any income tax here too. So, I mean,
exactly.
Yeah.
Let me just clarify one point, right? Because there might be some really astute people that's actually watching your program, right? So when I said 750, right, I mean as far as already taking into consideration what the original cost of the home is. So that would be your profit, so to speak, minus the cost of the home. So then so that's the taxable amount. So to reduce your taxation, let's say you move to Florida or Texas and you paid $400,000, then technically you'd be taxed on the $350 instead of the $750 capital gains. So just want to make sure that's clear.
Okay, but that's when you're moving from different states now. If you're in the same place, location.
You can do the same thing in interstate. Move from one town, one county, or possibly within the same county, right? Sell one home, buy another. Some people say, hey, you know what? I don't need a big house. I could go for a two-bedroom, two-bath condo. And let's say again, you sell your home, the profit is $750, right? Minus the original cost of the home, profit $750. And let's say the condo's $500,000. So you buy the condo, it's paid outright. You only tax on the $250. And the key thing is, hey, I'd rather be taxed on $250 than $750 and still not have a mortgage.
Yeah, true. Okay. What about the well, we talked about real estate. What about the investment funds, the trust? We call it the real estate investment trust. So what about
REITs? Yeah, REITs, real estate investment trust. So there are some REITs out there. There are some ETFs that focus on real estate, where you don't have to go and let's say buy property necessarily, but you can invest in a REIT or ETF, real estate ETF that actually has a good track record and good plan going forward, right? That invest in safe, no guarantee, but safe real estate that generates sufficient cash flow that will yield a return combined with a possible dividend, right, or interest payments that will not only outpace inflation, but also give you a capital return that surpasses the inflation, as well as trying to what the industry calls seeking alpha, that's above general market returns. Yeah. So you have the real estate option. You also, and again, I'm not recommending this to your viewers. They would have to make their own investment decision and do their own research and talk to their tax accountant as well as their tax advisor and so forth. But we kicked it off talking about energy, which is a commodity. So one investment strategy could be, for consideration, investing into commodities, right? Prices are going to increase, right? Commodities are raw goods and materials, right? Whether it's the commodity.
Volatile, isn't it? Commodities. Sorry? It seems to be volatile right now in commodities.
Well, I won't necessarily say volatile. What I will say is that commodities are reacting to market dynamics just like anything else.
Yeah.
Right. So the price of food is increasing. It's reacting to the inflationary environment.
Yeah.
The cost of energy is increasing, right? And there's so many other commodities that are increasing.
We'll be right back right after this break. Learn how to trade stocks with this stock market trading course available at TemiaBrinson.com. Here you will learn how to manage your risk. You will learn when to cut losses. And you will also learn how to define your targets. You will learn trading strategies. And these are simple strategies. These are proven strategies. And you will learn how to develop a solid trading plan. And this is a professional grade trading course. It was compiled by industry top professional traders with real trading examples. And this is also from experienced traders with over 7-figure trading results. And it's an easy to follow step-by-step approach. So go to TemiaBrinson.com and get this stock market trading course today.
Right now, the COVID-19 vaccines are available to millions of Americans, and soon they will be available to everyone.
This vaccine means hope. It will protect you and those you love from this dangerous and deadly disease.
I want to go back to work and I want to be able to move around.
To visit with Michelle's mom, to hug her and see her on her birthday.
You know what I'm really looking forward to is going to opening day in Texas Ranger Stadium with a full stadium.
We've lost enough people and we've suffered enough damage.
In order to get rid of this pandemic, it's important for our fellow citizens to get vaccinated.
I'm getting vaccinated because we want this pandemic to end as soon as possible.
So we urge you to get vaccinated when it's available to you.
So roll up your sleeve and do your part.
This is our shot.
Now it's up to you.
And now, let's continue with our discussion.
Commodities are reacting to market dynamics just like anything else.
Yeah.
Right? So the price of food is increasing. It's reacting to the inflationary environment.
Yeah.
The cost of energy is increasing, right? And there's so many other commodities that are increasing. So a good way to not only put your money to work to outpace inflation,
right,
but to also get a return is to look at some of these things, right, where the prices are increasing.
Yeah.
Especially going back to what I said before, industries, businesses that have pricing power. One industry is the oil industry.
Yeah.
Right? That also provides gasoline. Why? Because people are not going to stop driving. So what, and again, I'm not saying people should do this. I'm just giving you an example. Right. I bought energy stocks. Yeah. Not only, even before energy stocks started increasing in share price, look at the dividend yield. Many of these stocks were actually paying 4.5%, 5%, or near 5% dividend yield.
Yeah.
So if the price didn't even go up, you got a 4.5%, 5% return.
Yeah.
That outpaces inflation. Then on top of it, right, if the dividend stays the same, the yield will go down as the price goes up, but you still get that cash dividend, right, that you can reinvest into the stock, while at the same time, right, while the prices of energy and gasoline goes up, chances are the company will do well. Not only do you get the dividend, but you get to experience the capital appreciation in the share price.
Okay.
So that's a way to understand the market dynamics. So just like Lotto, no matter what you choose to invest in, you have to be in it to win it. Yeah. Don't just pay at the pump, pay at the grocery store, and not also put your cash to work to outpace inflation. That's, these are just some general ideas. So you can think about restructuring or rebalancing portfolios to say, maybe you were in 90% stocks, 80% stocks because the market has been doing great over the last several years, right? But in an inflationary market, some of those stocks might take some hit.
Yeah, right? I need this year, so yeah.
So you might want to rebalance to say, again, you need to speak to your do your research and speak to your financial advisor, but maybe go from a 90-80 in stocks to a 50-60 in stocks. In the balance of that, perhaps some income generating vehicles that we call income investments, not junk bonds, income investments. Because look, there's also a tax savings if you invest in certain in-state bonds. You're in Florida, right? The Sunshine State. Let's say you invest in some high-grade Florida state bonds, right? That are not without risk, but they're lower risk. You don't have to pay federal taxes on the
municipal bonds, right?
Municipal bonds, right? So you could buy state bonds, county bonds, and so forth, right? So the Fed will not step in and tax that interest.
Oh, okay.
If you buy in-state bonds where you live.
Okay.
Now, if you buy, let's say, a New York state bond and you live in Florida, then you're subject to being taxed at all those levels, right? So that's just a way to say, because financing, let's say Florida, they want to issue new bonds in an inflationary market, they would have to pay a higher interest rate on new bonds.
Right. Okay. Wow.
Right. So not only do you get to capture a potentially higher interest rate at a lower risk level, because it's generally, I think it's safe to assume that Florida, I haven't checked lately, that Florida has a good credit rating, right? So that would be a lower risk bond, municipal bond, that you could avoid paying federal state tax.
Right.
And we know Florida is already a lower tax state, right?
Yeah, no state income tax. So yeah.
So things are going well from that perspective. So these are just examples, right? So if I were besides these examples that I just gave, I think from an investor mindset, think about companies and industries that have pricing power, because those industries that can pass those savings, the higher cost onto consumers without losing demand, right? Hence, that's pricing power. They will stand to do well in an inflationary environment. But we all know, bulls make money, bears make money, but pigs get slaughtered. So you can't be too greedy and stay married to certain investments.
Right.
At the end of the inflationary environment, whenever that is, right? Yeah. So you have to pay attention to the signs when things start leveling off at some point in time in the future, then you rebalance again and possibly go to more growth. If growth is within your investment objectives, start rebalancing again and possibly investing into more stocks than income generating investments.
We will continue with John Burnett next week.
You have the mindset for success.